Welcome back, awesome people. Since the fascination with Wall Street bets, the term hold the line, paper hands, and diamond hands have become popular. Diamond hands refers to not selling and holding to the end, regardless of the potential risks, and paper hands refers to those end up selling early. These terms became popular to the mainstream when the stock market chaos between the little guys and the big guys. But now, what this phenomenon has done is it has made many people start claiming that every stock, every penny stock, is to be a diamond hand stock. For some, it is a humorous comment to be made in joking and jester and humor, but for others, they really are spending much of their funds on speculative stocks and holding to the end. Take, for example, the MJ sector this last week. Another pump by the thread discussion community went on a wild rally as buyers were screaming diamond hands and holding the line. But not everyone knew when to exit, and many are still holding the bag as the MJ sector fell hard after the spike. So in today's episode, I will be ranting about diamond hands and how this type of investing is causing more people to lose money than actually make money. So get bullish on that subscribe button and smash all the likes, bells, and whistles to help the channel grow and to get all my updates on these fantastic investments. And comment below with what you think, because I do reply to every comment. Now, calling diamond hands on a speculative stock is not wise because it is a speculative stock. But calling diamond hands on every stock? Are we just holding everything now? I mean, if I am going to be holding anything to the end, it would be a dividend paying stock. So I get paid until the end. But holding a speculative stock or a penny stock till the end, what is the end? A year? 5 years? Until a certain point is proven? Until you lose it all? Because for me, holding a speculative stock until the end with no exit strategy whatsoever is pretty much holding my stock until I am in the red or it goes to zero. For example, I posted a video about why I am selling my MindMed shares last week and the reasoning behind the collection of red flags. It wasn't just one or two things, it was a collection of red flags. And right after I mentioned that I'm selling mine, a few other YouTubers and influencers started mentioning that they will be selling theirs. So I said the unbelievable on my video. The unbelievable, blasphemous, unbelievable. I said that I will be selling my MindMed shares. And even when the technical metrics were all over the place, they still had zero revenue. Their trials were, I guess, moving up or changing timelines. The future outlook news was not looking positive. And competition in the psychedelic industry getting bigger left, right, and center. And I was ready to get out of MindMed and buy a company that had a clearer vision, in which I did sell majority of my MindMed shares, and I'm only currently holding a very small amount just so I can ride the wave and see what actually happens. But as soon as I mentioned that I was selling my MindMed shares, people, viewers, subscribers, non-subscribers, oh, by the way, many of you who are watching my videos are actually not subscribers. So please subscribe so that way you get all my videos. People were screaming in my DMs and Discord saying, diamond hands, hold the line on MindMed to the moon, don't be a paper hand, and all the other great buzzwords that we learned in the past couple of months. I know for some of them, it is just for fun and jokes, and I respect that. That's funny, humorous, because I'm a funny guy to say those lines, you know, just kind of in reference to the frenzy that happened. But for others, they are dead serious. And amateur investors will think this is investing and stuck holding the line while financially bleeding. I get it. Who cares about the amateurs? They will learn a tough lesson from their mistakes and learn over time. And yes, that is right. But for many, those lessons can actually be life-changing. changing. As new investors will get the idea that this is what investing is and I'm making all these gains, and they will think that's what happens constantly, but really they will just be holding a bunch of overpriced and unwanted shares because they did not know when to sell. And as we saw, those that really profited and gained from the GameStop and AMC frenzy were investors who knew how to invest and had an exit strategy. And the majority of the losers were new amateur investors who jumped in and didn't know when to jump out. And they were left holding the bag. And that is one expensive bag, as many of them bought GME or GameStop when it was over $250. And as fast as it went up is as fast that it came down, as it currently is around $50 a share. So congratulations to those who knew what they were doing, and lesson learned for those who are still holding the bag. So the point of this video is to inform you to make calculated decisions when it comes to investing. Whether you are investing speculative stocks, penny stocks, foreign stocks, or just hype media stocks, always make sure that you have an exit strategy. Jumping into a stock is a lot easier than selling a stock. Hearing that my neighbor made 10 times or 10x on GameStop and jumping in is a lot easier than seeing red and clicking the sell button. So if you are a new investor, do not rush into spec stocks in 2021. There are too many industries and sectors that are emerging, that are being phased out, and that are making no moves at all. So while 2021 readjusts itself from the craziness of 2020, start looking into buying dividend-paying stocks to ride this out. As I have said in all my videos, my strategy for 2021 is to be 70% in dividend-paying stocks and 30% of the higher risk spec stocks. Once we are able to see what industries made it through this pandemic and which ones did not, 2021 will be a year of high risk, high reward, and fast moves. Because as you can see, new industries and companies are emerging and IPOing pretty much weekly. So there will be plenty of opportunities to make fast profits. But make sure you do your own due diligence and not just follow other followers, including me. Why follow a clown? And if you want to see how I make my buying and selling decisions, follow me on my journey of turning $100 to $1,000 from trading only stocks on my Wealthsimple trading platform. I will be trading strictly Canadian stocks and will post updates weekly with how my portfolio is doing and what I'm selling or what I'm buying. And who doesn't love free money? And if you want to get in on the action of turning $100 to $1,000 for yourself and free money to trade with and $0 commission fees that won't eat into your profits, sign up with my Wealthsimple link down in the description box for $25 of free real money to trade with. Link is in the description box below. So again, I am not a financial advisor, so make sure you do your own research and consult your own financial professional. Thanks. There is so much wealth out there for all of us to get. So by allowing our hard-earned money make us more money is the key to wealth and the key to financial success. Subscribe, like, and share to help out the channel, and so you will get notified of when I go on YouTube Live or of my recent posts, as I will be posting my penny stocks, REITs, dividends, and speculative stocks from my portfolio and investments that I am currently buying and selling. Also, check out my update video of my journey of swing trading $100 to $1,000 through my Wealthsimple trade app. So subscribe. I want everyone to have the opportunity to get out of this work-life trap by buying back their freedom through investing. So let's all ride 2021 together on a journey of health, love, success. So until the next video, stay ranting.